My goal is basically to financially independent and retiring early. By the age of 40 is I think the sweet spot.
Apart from living apart from your risk appetite, if you are a safe and secure investment, mutual fund is the best way for long-term goals.
Mutual funds and equity are it's like testing waters when you are like beginning.
Mutual fund is the safest one, and at the same time, you are investing in equity only. End of the day, but in a professional approach. If you are very risk-taking, go for a small cap.
How do you evaluate a mutual fund? Because for a stock, you can see PE ratio, PE ratio, and the fundamentals of company.
Actually, past performance is the only benchmark. But precisely, who is the fund manager? What is the purpose values? Who is managing? Since from how many years consistency they are giving? Each and everything has to be considered.
Hey everyone, welcome to the Rupeezy podcast. I'm Aditya Gautam, and we have with us today Mr. Vivek. Mr. Vivek is a seasoned mutual fund distributor and have been associated with Rupeezy for quite some time. So together we will be demystifying mutual funds for all the young investors like myself who are curious to begin their investment journey but are not sure where to begin with. So thank you so much for being here today, sir.
Thank you. Thank you for having me, Aditya. 20 years of experience in financial market. I will guide you better. I think so. I will guide you better way to reach your financial goals.
Yes. My first question to you is that for somebody, I don't invest right now,
Yeah.
but I want to begin investing. What are my options and where should I begin with?
It's totally depending upon your risk appetite.
Okay.
In financial terms, risk and reward is parallel. So you more risk and rewards will be more. But as a conservative way, you can do the best is mutual funds. So apart from that, do you have any particular time frame goals or eventful goals or retirement or each and everything we can be consider in a journey of financial investments. So once you are particular about your goal formats, we can plan according to that based on your investment, your future incremental in your income levels. Then we can according to that we can plan around it. So that way you can safeguard your financial growth and at the same time capital appreciation also.
So my goal is basically to my long term goal is to be financially independent and retiring early. By the age of 40 is I think is a sweet spot.
Everything is possible, but only thing is proper investment in a known manner. In the sense, how you take risk appetite is important. As a if at all you are very confident in more risk portion, any equity is the best option. So invariably you need to be very cautious, and at the same time it may erode your capital also if at all you go for a take a more heavy risk on that part. So you can leverage your skill and expertise in if at all you go for a equity fundamentals and company profiles and short term predictions. You can leverage with the F&O so that you can reap in leaps and bounds. But only thing is you need to be very vigilant, and at the same time you shouldn't erode your capital at any point of time. So first you safeguard your capital at any cost, then you can reach for the next level. So in that scenario, if it is a risk appetite part, apart from living apart from your risk appetite, if you are a safe and secure investment, mutual fund is the best way for long term goals. So where you are still not at the started in mutual fund is the best to test the equity markets. So in a mutual fund way. See, once you know parity between the mutual funds and equities, you can jump into any way. So for that, I will guide you if at all in the first starting manner, so that you can once you learn, you can also keep on investing in the equity and mutual funds.
So I get it that mutual funds and equity are it's like testing waters when you are like beginning.
Yeah, of course. Mutual fund is the safest one, and at the same time, you are investing in equity only. End of the day, but in a professional approach. So there in mutual fund is a collective money that people invest in a mutual fund, mutual funds with the help of the equity experts, so that you can safeguard your returns, and at the same time capital safeguarding also.
What are the other types of mutual funds apart from equity?
So apart from equity, you can consider as a maximum three types. One is aggressive mutual funds, one is theme based, or one is for tax saving. So in tax saving now it is irrelevant now because of 12 lakhs is a individual income. Nowadays maximum it's not covered each and everything, it will be covered for a tax plan. So not required in a tax plan. So we have right now we have two kind of thing. One is a debt fund and one is a equity based. In equity based there is a multiple types of theme based. Each and every variants we have focused funds, even flexi caps, small cap, large caps, depending upon your risk appetite.
Okay.
So in that scenario, if it is a long term goal or short term goals, you can define the which kind of a fund we need to invest. So that with the expert advice, you can invest on sector wise each and everything. So focused funds is based on time frame or business models. Now maybe next 5 years, EV will be evolved electronic, just like a battery operated cars and two wheelers. So maximum people invest in equity related to equity companies of like battery operated or vehicles. So then we'll reap the best benefits about it. You shouldn't be diverse much. Very diversity is very harmful for your investment reap. But if it is a focused, there is a 2 to 3 variants is ideal funds is the best for you, depending upon your risk. So if you are very risk taking, go for a small cap. It should be as you are a very young, you can go for a small cap for the reap out the market benefits, equity market benefits, which India is growing. So next to 10 to 15 years, you can reap the best returns on that. Right? The CAGR considered as a 20 to 25% brackets in the small cap. You can reap and bounce. You can get your achieve target in a specific manner. If you are very conservative about it, go for a large cap, which it will be consistent returns, but it will be not riskier, not a T20. It will be test match. If it is considered as a 10 to 15 years of longer tenure, obviously go for a small and mid cap funds. Since you are very young, you can have a benefit of staying long. If it is a risk appetite is as I said, risk appetite is more, then go for a other than equity mutual fund. You can go for equity, but once you learn the things, how to trade or how to invest, there is a much difference between trading and investment. So keep on investing is totally different, and trading for a short term gains is very difficult and should be very subject knowledge is important. So that is advice for once you have a fix for a 10 to 15 years, 23rd you may invest for a small cap. As per your age group, I am telling that way.
Small cap for 10 to 15 years of gold.
You may keep on investing for a long term.
So for small cap, what do you prefer? Where should I invest in small cap?
Small cap Nippon small cap fund is doing very good. Great. If you consider that part is very absolutely good. If you little bit conservative, not that too much aggressive, go for a Motilal Oswal mid and small cap. So it will be small cap also is there and mid cap also it will be covered. And CAGR also have good return for if at all 23rd you are investing for 15 years at an average assuming of 20% of CAGR, it will be around 2.6 crore. It can be achieve the corpus of value.
Okay.
So that way you can say beat the market condition.
Right.
Yeah.
Got it. So how do you evaluate a mutual fund? Because for a stock, you can see PV ratio, PE ratio, and their fundamentals of company. But how is a mutual fund evaluated?
There is much tools available in the market. Actually, past performance is the only benchmark. But precisely who is the fund manager, what is the corpus values, who is managing, since from how many years consistently they are giving, each and everything has to be considered. As it may be next year, it may changes to the total. Say, if it is a thematic fund, we couldn't able to consider that after the 2 years it may happen changes. I think happen, but whereas in the mid and small cap fund, there arbitration happening. You keep on doing they change the companies which they based on their performance. So obviously you need not worry because as the experts is there. So obviously they want to improve their standards also, and they want to beat alpha out of equity markets. So obviously you will be in the right hands.
Apart from mutual funds, how do I pick the right insurance for me? You have mentioned about health insurance being the priority. Then term insurance and everything. So this is a little bit confusing for me, and people who are about my age tend to get lost in this field. So how to pick the right insurance?
So health insurance, you will go for a SAP is the best standalone policy which you offer for a only health related insurance offers. So like HDFC, no, sorry, Star or Care, like standalone policies will be ideal. Not like a combined insurance provider. So that will be ideal for you rely on that. Then claim ratio is the most important part. So based on that claim ratio, you can choose the which is the best one for. So health insurance. But rest of the things in the insurance segment, if you consider LIC, the government organization, and this is one of the best one. And apart from that, Tata go for a Sampurna Suraksha for a life risk coverage, term insurance. It will be ideal for us. So mandatorily go for a health insurance coverage. It will be mandatory for you and your family also, family members, parents also. So that is the best way to safeguard health.
Got it. About coming back to mutual funds, I have one more question. I've heard people uh, setting dates for mutual funds if they have invested in multiple. So, is there anything special about setting a date? For example, some people would start one SIP at first of the or second of the month. Some people would do it at 15th. Some people would do it at the end of the month.
It's a only sequence of there is usually 90% investors in salary means obviously they will go for a salary dates or what is the first EMIs. After deducting that EMIs or home loans or something, it will be next rest of the funds will be included in that particular day. So depending upon their loan structures. So there is no not much scientific about it. But sometimes 10th or 15th or market fluctuation, no one will catch that kind of a scenario. It's not consistent that market will fall on that particular day only so that you will get a best NAV. It's not happens.
Okay.
So how many years you are working now as of now?
It's been 2 years that I've started working.
Okay. So apart from SIP, we can add a step up also for your investments, SIP investments. Once you upgrade your incomes levels, obviously you have to support. Every year you have a maybe 20% of growth in your salaries or something. The same way you need to upgrade your investments, SIPs also 20% higher. Step up, that's called step up insurance, where you can have a yearly increase in your investment by 20%, so that you can achieve your goal in earlier step. As you told, you want to retire in 40, it may end up to 38 or 35 also, depending upon how you invest in the step up way. So that is one ideal advantage. Once you increase your salary levels or bonuses, or that time you can invest in a single time investment in a bonus, or Diwali bonus or something, or performance bonus, which is a value addition. Then you can keep on investing.
So, should you also withdraw like after a year to keep withdrawing a little bit, like systematic withdrawal plans and
So systematic withdrawal plan is only for meant for after retirement style. So once you made a corpus, now you are too young to accumulate your wealth rather than enjoying it.
apart from withdrawing, let's say I keep investing and in maybe 2 or 3 years I want to buy something for which I need some money.
So that is the beauty in mutual fund. When it's a liquidable product, any within maximum 4 to 7 days, you can get back your whatever you liquidate your mutual fund holdings. Within 7 days, you can get back. Whereas in the reality, it not happens. That is the way. That is the beauty of the market. Either equity or mutual fund, very liquidable products. So since you accumulate from 20 to 30 years, one you want to purchase or you want to go for a vacation or any life events, or kids are joining a kids school fees or anything, it will be liquidable product. So obviously you can encash it in the instantaneously, you can achieve your goals.
Okay. Regarding the recent market crash, so I start actually the test I did start an SIP a year or 1.5 years back, and then market crashed a lot, and my returns eventually became negative.
Okay.
So in this situation, how should I react? Because What I did is I got nervous and I took the money out, and the market did fall afterwards too.
That you should be brave, that you need to add a pump of more funds. That is the scenario. When market falls, you need to pump more funds only to average at least. So that the next recovery, you will be the best first beneficiary. So never worry about markets. Actually, markets are doing great. So obviously, keep on investing. It's a temporary scenario. Any each and everything is a bubble. Whenever the negativity happens in the market, maybe corrects very steeply. But only thing is you need to encash in that part also. So since you have a long term focus, markets are risk bound. There is no mention that 100% it's a risk compulsory falls. Volatility is the mother of your growth. Otherwise, you couldn't able to achieve your goal.
Okay. So thinking about investing in mutual funds, I am curious to know if I let's just start investing at about 20,000 right now. Every month I am sending 20,000. Let's say small cap, since you said 10 to 15 years goal. Yeah, capital better. How much money can I expect at the end of like
15 years.
yeah.
Uh, Hypothetically, maybe considering as a 20% CAGR at an average 18 to 20%, maybe around 2.5 crore you can accumulate your corpus in the span of 15 years. That is a way you can calculate in that way. So if you want to safeguard, don't take risk of that much, go for a balanced fund or flexi caps. It may take to 15 to 18%. It will be come up to 10 to 2.2 crores of corpus.
What exactly is a flexi cap?
Flexi cap is depending upon market condition. They play around all cap. Sorry, it's like they invest in multiple asset equity classes, equity shares.
So I know small cap, mid cap, and large cap are based upon the market cap of the companies. But what is the difference between any cap and flexi cap? Because what does the flexi cap mean?
So flexi cap, it's a, they invest in any segment in the sense of small cap and mid cap segment, mid cap companies and large companies also. It doesn't mean any definition of you need to invest in only 80% of small cap or 20% in mid cap or something. Flexi cap is depending upon the market condition, they play around. But if it is a market condition is not at all volatile, they go for a small cap, or if it is more volatility, small caps will be the dent, so that they will shift that maximum to the large cap. So that is called flexi cap.
Does it only happen in flexi cap, or does it also happen in small cap, large cap, mid cap? Do
It
they
is
play around?
with the predefined mutual fund. So it will fix it to small cap means obviously they will invest in the small cap only.
But do they switch in small cap companies?
Yeah, of course, switching is a fund manager's game.
Okay.
But only thing is they couldn't able to shift from that funds to large cap.
Okay.
So that's why you need to be fixed for a small cap only. If it is a predefined small cap fund means obviously it will be in a small cap fund only.
Okay.
So instead of they may be not invest in aggressive way, they can shift over the each and every company wise or which is the performing company, they can change it. That's all.
Okay, got it. So FlexiCap, I found really interesting because for people who don't know whether to invest in small cap, large cap, or mid cap, they can just put their money in FlexiCap.
Exactly,
And,
exactly. And balanced fund. Both are very equivalent way of without any risk of knowing the things.
Right.
It can be consistent growth. It can
Okay,
give you consistent growth,
understood.
irrespective of market condition.
Okay. So if I let's say start investing and I've invested in a small cap, and my goal is again 10-15 years. Uh, how many SIPs should I do? You have recommended me two or three names, but how many is too much and how many should it be?
So mutual fund itself is a diversified.
Right.
In that again you need to diversify much fund is there is no logic. So you couldn't able to filter it where exactly you are you are earning more and earning less. So you can to balance it. See, with proper 2 to 3 focused funds only you can manage your things better. If you want to shift over or change it from non-performing to performing one, to be ideal for you to 3 to maximum 5.
Okay.
5 funds is ideal.
Okay.
Yeah. So apart from this mutual fund and equity, insurance, Then any other assets you are investing?
No, but I'm quite fascinated by equity. I see people talking about this stock going up, this stock going down. They invested this much in it and they got this much profit. So about equity, but I am a little scared too because uh, it's a little time consuming and you need to pay attention to companies' fundamentals.
So equity market is it can give you the best in the sense you can make a sixer or a T20 like that.
Okay.
But only thing is you need to know where to start and where to end. So there is a two things you want to learn in equity, precisely two variants. One is a fundamental approach and one is a technical approach. Fundamental approach is 100% you are following the based on your company performance, balance sheet, predictions, dividends, what exactly the company performance is from how many years, consistency. Whereas technicals, it's depending upon volume and there are so many indicators which you follow for a short term. Technical is nothing but a you are following shadow.
Okay.
Fundamental is you are following a direct company fundamentals. Technicals is following a shadow.
Okay.
So shadow may give you the wrong direction sometimes, or you may misinterpret yourself. So fundamentals is ideally for long term and the best one.
Okay.
So technical also the best. I am not saying that it's wrong or something, but you are following the shadow practice.
Okay.
So as per I concern, 100% technical learning is a way of studying charts. It will be shadow practicing.
Okay.
That's why I firmly believe.
Okay.
My experience. I may be wrong. So follow fundamentals so that your long-term goals will be achieved in equity or mutual fund.
What other investment options do you consider apart from? We have spoken about mutual funds, we have spoken about insurance. We have also spoken about equity just now. What
So rest of the things is apart from your fixed returns, if it is a bonds or FDs, corporate bonds and FDs. Depending upon again there is a RBI ruling for interest rates and each and everything will be fall into the picture. Apart from that, gold and reality only left out.
okay.
So in that scenario, basic requirement is a land or house. Mandatory to you have to purchase one or the other day. You need to purchase a house. Yes. If it is a existing property already there, you don't want to invest on further on reality. You can go for REIT also, REITs, real estate investment in equity manner.
Okay.
So that it will also give the same benefit of reality in equity, liquidable manner.
Okay.
Like a gold. Even gold also in ETF form, you can purchase which are the smallest fraction also.
Okay.
So that is the beauty of in equity that even reality also you can evaluate it.
I get that there are multiple options, but I think what I feel is that I should start with mutual funds, then gain more technical knowledge, and then maybe later jump into equity.
Equities. That is the ideal advice. Whichever the client I will met,
Okay.
first advice is I will get that first you need to learn the markets. Before that, you just invest in mutual funds so that you can learn properly. Then you can go for a next level.
Okay. For SIPs, should I, let's say I have picked 2 or 3 mutual funds, should I invest them at the same day or should I it doesn't matter? Does the date matter? When should I?
Nothing.
Because the SIP
Consistency. SIP is nothing but you are averaging your investment at a particular phase.
I also meant to ask in terms of like deduction. So for SIP, every month it will be deducted, right? So should it be on the same date or there is no such bar?
Means according to it on.
So if I'm in, if I let's say invested in 2 mutual funds, now maybe next month or after 2, I like another one. So should I like wait for the SIP date to start begin it, or I can start it at any time?
At any time you can start it any time. You want to invest one more fund, right?
Yeah.
So at any time.
Okay. And let's say if I only want to invest in 4, but then I like another one, another mutual fund. So should I get rid of one of them that I've already invested in? And
Not
start this?
necessary. If it is a fundamentals are good and your gut feeling say that the market will go for that kind of a fund, obviously you can go for it. Doesn't matter. But my precisely guidance is for you, don't spread too much diversified. That's all.
Okay.
So instead of that, maximum 5 to 6 funds so that you can focus and you can rebalance it and you can have a constant look out for what exactly is happening and within 6 months which is the performance it will be having a performance check.
Okay. My concern is that if I want to.
So you are talking about process, that's not at all a worry. So it's very easiest. It's a fingertips. That's all.
Okay. Talking about a mutual fund distributor.
So it is a help is nothing but my experience. First of all, whoever you approach for the mutual fund distributor, the experience is matter.
Okay.
See, there is a 0.5% or 1% is a direct funds also available. But only thing is you doesn't know anything and you want to jump into the picture. Then obviously you may end up by studying. You can the sky is the limit for studying. But end of the day, when you want to start, just you as a guidance with the experienced person. That's all.
Okay.
So later on stages, you may discard your mutual fund distributor also
Okay.
and invest it directly also. That doesn't matter.
Okay.
It's a hardly be 0.5% or difference with the growth.
Okay.
Growth wise. But obviously it may take to next level if it is a long term of 15 years. If funds differs, maybe 100% I agree that. But MFD is it's just like a guiding star for you.
Okay.
So a rebalancing part or doing a KYC or giving the right information in the right time. This this gives them edge. That's all.
Okay.
That's correct. So since you focus on your maximum time into your career, maybe your office or your business or something. So MFD is a informed person that he will guide you in a better way.
Okay. So people go by usually 30-50-20 rule or something like that. How important is it to follow such a rule, and what should be the
There is not thumb rule, but only thing is it's a structured manner.
right?
So that you can balance it in a for a retirement or you have any focused goal or something. That will approaching is the scientific way. Then you have to approach right.
Right. So what is a ideal or standard structure one can follow?
I think is sometimes it will keep on changes. Gold, see, gold is the safest investment, but only thing is last 6 months it appreciated very well.
Yeah.
So it's only because of uncertainty. The uncertainty is a funda for the growth are negative.
Yeah.
So that time we couldn't able to fix it that only 50% in gold, 50% in reality, or 30% in equity. It doesn't see timing when you want to encash that requirement. Obviously, you are in a negative time in the sense so markets are falling. That is a time only your money requirement. Then obviously you need to encash it, irrespective of market condition. That time it won't work. But only thing is systematic approach. If at all you doesn't have any obligation to encash that, scientific way of 30, 40, 50, whatever the structural product is the best.
Okay. So for someone like me, I have felt that whenever something is going up in the market, for example, gold prices this time, they are like reaching sky high. I feel like I just want to invest, but as you have also mentioned that uh, investing at when something is at their low point or when it's going down is the right investment. How should I deal with this emotional feeling of getting into it?
It's
and
like
going-
a FOMO,
Okay.
feeling of missing opportunities. It happens, but only thing is markets are is a news based because of situation the markets will act. So for that, is it a short term news or long term or what exactly impact the market? You have to decide means obviously it will be experienced only.
So you think investing in gold right now is still
Good.
okay?
Good, but not to the extent of that you redemption all SIPs and stop all SIPs and investing in gold is not advisable.
Okay, that should stay consistent.
Yeah,
That should
yeah.
okay. Yes, I got it.
It's the only the momentum stock that is called is a momentum. Just gold is a momentum now.
Okay, okay. So if I want to buy a house in next 5-6 years, how should I?
Maybe 10 years ideal because once you married and then kids and then maybe house. It doesn't matter nowadays. There is no cycling momentum.
Okay, I'll start again.
Yeah.
So I also have this thing on my mind that I want to buy a house like when I turn around 30. So maybe how should I plan for it for the next 7 to 8 years so that I can buy a house, and how should I get it? Like I'll be taking loans, or if I'll be taking loans, what how should I take it? And
So your loan shouldn't be exceed for your 20% or maximum by 30% of your salary. That is the ideal way to safeguard your financial health.
Okay.
So whereas in this condition you are around 25 years,
24.
24 years. When you want to plan the house, what?
Maybe by until I turn 32.
That's the ideal age to purchase a house. That time obviously your income level also increased. Even taking for around 80% of your housing loan also, it can be sponsored by loan. So obviously you can have a better option for that. Meantime we have around 8 years of SIP journey, which are around 20 trends. Maybe around the 1.1, 1.5 crores you have a corpus. Obviously, you don't depend on maximum on mutual fund redemption only, whereas you are sponsored by loan amount. Can be considered as the best time to acquire that time, 32.
Okay.
So maybe you have a corpus of around 1.5 crores. You can easily make a down payment on that, and the rest of the things will be considered by loan and EMI.
Okay. So you are considering 80% to be the right percentage
Loan
for
amount,
loan.
yeah,
Okay.
ideal. So apart from that, you want to invest and keep on, as I told you, year on year your performance for your salary hikes. You can keep on step up this SIP base, so that it will be reach out more corpus in 32 years itself.
Okay.
More corpus.
Okay. So I want to begin this as soon as I can, but I would also like to get a roadmap from you for the next 6 months of my investment, of how should I invest and where should I invest.
So first 6 months, maybe you are spending on only as you are working in a cosmopolitan. Maybe your expenditure on food and day-to-day travel. Apart from that, I don't think so much commitment from your end.
Yes, I'll be able to like spare at least 20,000 every month.
Out of this investment, you couldn't able to make anything.
Okay.
Either for this one, but keep on consistently do investing,
Okay.
so that at least minimum 5 years it will be ideal for you to take up any some lump sum amount, so that you can do anything investments.
Okay.
Apart from mutual funds.
Okay.
Either you'll go for again focus on equity or F&O based on your learnings, and you want to have a risk appetite for earning more, then you can opt for a equity. That is my advice.
Okay. After a long discussion over the investment, I think I am confident now about the investment that I want to make. So I feel like starting with mutual funds, small cap, and over time gaining knowledge about companies and everything, I can start investing in equity as well. So that would be my plan and journey. Uh, Thank you so much for all the information that you have given me today. Uh, this was very helpful, and I believe that the people who are my age watching later, starting their investment journey, yes, they will be very benefited, and they will get the knowledge that they were looking for. Thank you so much for tuning in to this podcast. Please subscribe, and we'll keep bringing such content to your feed. Thank you.
Thank you, Aditya.
Thank you.
Thank you.